Good morning, investors and traders, and welcome to our channel in which we discuss several different equity markets. And of course, we do look at commodities, cryptos, and forex market as well. In this particular video, or let's just say in this live session, I give you guys the opportunity to ask me as many questions as you like. As always, we do these videos in a live format just to give you the opportunity so that you can clear up your questions that you may have in relation to the major indices, in relation to commodities such as gold and oil, and major forex pairs such as forex and sterling. So in today's market, what we will be looking at, we'll be looking at the Dow Jones and then see why, and the S&P 500, why the markets are moving to the downside, and because clearly that the market is indicating, the futures are indicating that the markets will open to the downside. And we will also look at why the European markets are trading to the upside as well, and if there is an opportunity within that as well. My name is Naeem Azam. I come with a wealth of 15 years of trading experience. During this time, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader for Bank of America. Currently, I work as a hedge fund, as a chief market analyst for EverTrade. Now, if you haven't subscribed to our channel, please make sure that you do, because it will help you to get a notification the moment we do these live videos. And of course, it will help us on YouTube as well. Now, one of the major factors which is common among the European and the US market, of course, today is the Federal Reserve meeting, because at 7 p.m. UK time, we will hear the Federal Reserve decision on the monetary policy and on the asset purchase program. Why this is very important? Because this is going to bring a massive move in the equity market, in the forex market, in the commodity market as well. And of course, fixed income, but we don't cover them. But in these three particular markets, we are going to see massive movements. Now, what to expect from this one? Remember, during the month of December, we had deterioration in US unemployment data. We've also seen 3 consecutive months of consumer spending going lower or showing weaker reading. Now, both of these factors indicate that the economic recovery has become a lot more fragile. Now, if that is the focus among the Federal Reserve, then that means dollar is going to move lower. Euro dollar will move higher. Sterling dollar will move higher. In terms of equity market, we will see a further move to the upside. Why? If you are asking if the data is bad and then Fed is keeping the monetary policy unchanged, then why do you expect the equity market to move higher? The reason is very simple, because investors and traders will think that this support from the Federal Reserve is going to stay here for a much longer period of time. And hence, because of that, we will see a move to the upside for the Dow Jones, for the S&P, and of course for the Nasdaq index as well. There is no doubt that these markets are way overbought. Look at the weekly chart of these markets, and it will scare you if you want to take a long position in these particular markets, because they are too far away from their 50-week moving averages. And that the distance between the price and the 50-week moving average is one of the longest, one of the highest that we have seen in several years. So expect some event to trigger a sell-off, and then the markets will return towards their 50-week moving average, and perhaps that could be much better long-term opportunity or a swing position opportunity to go long in this market. Now, of course, that could be in terms of a GDP, the US unemployment number, and disappointment around the fiscal package, which we are hearing about from the market. More importantly, guys, if you think the language, the terminology that I'm using in these videos is something that you do not understand, and you want me to simplify it even further, please make sure that you comment on here just down below so that I can simplify some things more. So if there's any term which doesn't really make sense too much for you guys, or it's just too complicated for you, just make sure that you do put that question here. I won't charge anything extra for that. So I'll just give you the explanation of that. Pretty simple. Now, in terms of a gold market, again, we are moving to the downside. Remember, yesterday I talked about gold prices moving towards the 1837 price level. that particular price level is very much in play. Prices are likely to move to that particular price mark, and then let's see how the market will perform from here. In terms of oil prices, very much consolidation. 54 remains as a resistance. Prices are trading at 53 mark, but overall trend is still very much skewed to the upside. In terms of a Bitcoin, 30,000 price level is very much in focus, and traders are hoping that the price will stay above the 50-day simple moving average, because if it doesn't, then it is highly likely for Bitcoin prices to move towards a 100-day simple moving average, and that means prices moving below 25,000 price level, which will be 100% retracement from its previous high of 20,000 pretty much. Because from there on, where prices will move to towards 21,000 to 23,000. That's all for now, and I'll see you guys next time. Several different opportunities. Make sure you take part in some of them, which meets your risk criteria. Thank you.